Welcome to PhillipCapital Weekly Market Watch. I'm Camelia, Business Development Dealer from Phillip Futures. For this week's episode of Market Watch, I'll be talking about one of the current trading product, crude oil. Crude oil prices have been on a rally and have risen to a 6-month high to above $46 per barrel this month. The rise is supported by concerns of a reduction in global crude supply, where US Information Energy Administration reported last week that crude oil inventories have dropped by 3.4 million barrels the previous week. Furthermore, the recent Canadian wildfire also had taken about 1 million barrels a day of crude oil production offline. On the demand side, we have a new star performer where we are seeing a strong increase in crude demand from India from the past few years. According to IEA, India is consuming about 0.35 million barrels of crude oil per day, a level which is currently on par with China and can potentially take over China, the world's second largest oil consumer. Therefore, with the signs of a diminishing supply glut and potential demand growth in India, will oil prices continue to rally from here? We are still cautious about the rally in crude prices, as although supply and demand seems to be balancing out, where the current world oil demand stands at about 95.3 million barrels per day, while the world oil supply is currently at a robust level of 96.4 million barrels per day. The US crude oil inventory are still at a historical high level of 540 million barrels as reported by IEA. Crude oil production figures are also on the rise as the Organization of Petroleum Exporting Countries, OPEC, production reportedly reached its highest level of about 33 million barrels a day since 2008, as Iran restored its output previously constrained by sanctions. Iran has pumped 3.6 million barrels of crude oil a day in April last month, the most since November 2011. To add on, the Canadian producers are also already resuming their oil sand output gradually to 1 million barrels per day, the level before the wildfire. Looking at the technical chart, WTI oil prices has formed a double top pattern which poses a bearish signal for oil prices. The relative strength index is at 61.72 levels, which is very close to the overbought signal at 70. This suggests that the rally might not continue and we might see prices come back down and trend within the $42 to $48 per barrel in the short term until the next OPEC meeting on 2nd June. We believe that the upcoming OPEC meeting is likely to remain status quo, as crude oil prices have recovered about 80% from the low in February this year, and a production freeze or cut is unnecessary for now. However, IEA reported that we might be in for a production increase instead, as Saudi Arabia might increase output to stop other producers, mainly Iran, from gaining market share. This will pose a bearish effect on oil prices and might push prices down to the next support level of about $38 per barrel. With this, we have come to the end of this week's edition of Market Watch. For more information on the risk and return on investing in the crude oil market, you may subscribe to any representative from Phillip Futures. Please subscribe to us on PhillipCapital YouTube channel and Facebook, and stay tuned for more Market Watch videos. Thank you.